Jason. So I'd love you to share with our audience the importance of context, whether you're raising millions of dollars, whether you're giving advice, those in our audience, a lot of people give advice, or you're receiving advice. So can you talk about your philosophy when it comes to context?
Yeah, for sure. And this comes up because as a venture capitalist, you're sort of driven to give advice all the time, but you don't realize. I think I'll just speak in terms of I didn't realize what I was doing when I was a junior venture capitalist, just kind of like spitting random thoughts into the air, lobbing them over to founders. And as I got more into a sort of advisory role running the company that I do now, I realized how important it is to think about the words that you're saying and the advice that you're giving, because I find that so much advice is given in a very soundbitey format or in a way.
Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
All right. Hello, everyone. I have another great guest joining me on the show today. He's run the digital media group at MLB.com. He's a venture capitalist and a venture-backed founder where he recently sold mobile video stories platform to Hustle in 2020. He's now the founder of Adamant Ventures, where he advises startups. He's helped them raise over $250 million. Jason, I'm glad to have you on the show to share with our audience how to raise money and all things venture. Welcome.
Rory, thanks for having me, man. Always excited to chat about the thing that you spend 24/7 thinking about, where you never think anyone else would think it'd be interesting. So I'm always tickled when someone wants to chop it up with me about the topic.
Yeah. Before we get started here, why don't you give our audience a little bit of background and how'd you get involved in the venture space?
Yeah, I mean, I feel like my career has never been a straight line. It's kind of one thing led to another. But sort of always loved technology, had worked in technology, like you said. I eventually at some point ran the new media product group at MLB.com, so Major League Baseball's digital media company, and jumped from there to business school. And after business school, was trying to like evaluate a bunch of different things. Venture capital was one of those exciting spaces that a lot of my classmates wanted to get into, and kind of right place, right time. Got to speak to Alan Patrikoff and Data Settle at Graycroft Partners. And so, the sort of backwards looking revisionist history kind of tells it in 10 words, but there's some twists and turns along the way. But that got me my start in venture capital. Did that for a handful of years before jumping onto the other side of the table and starting and running my own venture-backed startups before kind of doing this thing at the beginning of the pandemic. I had just exited Tape, the last company that I ran, and was trying to figure out what to do next. I knew at that point that I wanted to do something bootstrapped. I was going to run my own company and not actually do it with investors this time. And was pretty certain that it was going to be something software related. So as I was building software by myself on the side, I started taking calls with startup founders and trying to help them figure out solutions and answers to anything that they had questions around, not as a business, just to kind of pass the time. If you remember, we were kind of locked in our houses and apartments, just trying to find something to pass the time during the pandemic. And during these calls, figured out that there's a really deep and painful problem that these founders were experiencing, which I never quite understood because it became so natural to me.
Yeah, you're natural.
Been a venture capitalist and having done it before, but this idea of fundraising being a problem is something that I kind of latched onto and never let it go. So it's been over 3 years running this company and having a great time doing it.
Yeah, I'm fascinated by the process here, and I know you talk about context, Jason. So I'd love you to share with our audience the importance of context, whether you're raising millions of dollars, whether you're giving advice, those in our audience, a lot of people give advice, or you're receiving advice. So can you talk about your philosophy when it comes to context?
Yeah, for sure. And this comes up because as a venture capitalist, you're sort of driven to give advice all the time,
Yeah.
but you don't realize, I think I'll just speak in terms of I didn't realize what I was doing when I was a junior venture capitalist, just kind of like spitting random thoughts into the air, lobbing them over to founders. And as I got more into a sort of advisory role running the company that I do now, I realized how important it is to think about the words that you're saying and the advice that you're giving, because I find that so much advice is given in a very soundbitey format, or in a way that.
Are you an accountant looking to generate more revenue and secure your future success as automation and artificial intelligence revolutionize the accounting profession? If so, contact us at AFO Wealth Management Forward. We specialize in helping accountants and advisors just like you build a custom brand to pinpoint your optimal clientele, generate highly qualified leads through our data-driven digital marketing, and execute wealth management growth services to bring more value to your firm and your client's life. Our strategic approach to branding, marketing, and wealth management is carefully tailored to attract ideal clients, increase customer retention rates, and cultivate lasting relationships with clients across generations. Visit wealthmanagementforward.com to book your free consultation to find out how you can elevate your practice.
Drives clicks, or is a way that like sounds good as a headline. And when that happens, you get this advice that is great for Twitter, but is not very good for execution, right?
Yeah.
And I always tell people, you hear these things and you really, really need to double click on the context around which the person giving you the advice is sort of formulating these ideas.
Yeah.
Mostly so that you can figure out how you apply very rigid, specific pieces of advice to your own situation, because not everyone is the same, and you can't like fit something in perfectly. You have to be able to adapt it to yourself, and you can only do that with context.
Yeah. We talk about on the show all the time. It's part of our approach here is the human first financial guidance. Using those behavioral finance tools is really just understanding that client and having that deeper connection with them and asking those questions. I love Michael Bungay Singer. He has the book, The Advice or The Coaching Habit, and he talks about that advice monster where we want to, for lack of a better word, Jason, throw up our knowledge onto the person we're talking to. We either want to save them, right? Save them because we see a problem, or we want to just talk about what we know best because we develop this knowledge over time. And it's really the best when we go about that deep discovery and finding out really what matters to that person, and then crafting our messaging to meet maybe their pain points or what they're looking for.
Yeah. I mean, I think you don't want to you don't want to give out cookie cutter advice. You want to give someone bespoke support, right? I think that is the key thing. And that's why I always harp on context, because that's the only way you get to something that feels a little bit more bespoke.
Yeah. I know you talk about also you're making fundraising not only more efficient, but easier and more accessible. Can you talk about how you're doing that at Adamant?
Sure. I mean, it's simple. I like saying it's simple, but not easy. And a lot of these things are simple the way I describe it, maybe not easy to implement. But it's my real belief that it does not take that much education to get someone to experience a step function change difference in their efficacy when it comes to fundraising. I find that there's this ethos. It's not an ethos, but it is something that people rely on so much in my world, in tech and startups, which is, fake it until you make it. You're just kind of like moving and trying to show up in a way that you think the world wants you to behave and execute. And that can take you so far. But when people try to do it in fundraising, they end up shooting themselves in the foot. They end up making huge mistakes early on that reduces their chance of being successful significantly. And so my ethos on making it easier and more accessible is just like, I actually think we can put a lot of education out there that, like I said, puts a lot of people on a much better path. And then, we figured out a lot of ways to support founders that are maybe deeper into a good process and trying to remove some of the pain, remove some of the time investment needed to actually execute processes. But at a high level, I believe that startups are a huge driving force in economic growth and around the world in all countries. And the more talented people with great ideas and passion we can get on the road to building companies and building new innovations, I think the better off we all become. So it's been fun to dedicate myself to this and have a great team doing it.
Yeah, I like it. I don't mean to get too technical or tactical here, Jason, but if you're looking to raise money, how far out should you start this process? When should, before you start doing cold outreach and to VCs and setting up meetings, when does that process really start?
Yeah, I mean, I think it depends on what you define as the process. But if we want to draw a line between live pitching people and preparing to fundraise, I do tell people like the best fundraisers, the fundraisers that happen the fastest, that go the smoothest, generally speaking, have probably had the most amount of preparation for them. And we just got done with the podcast where we discussed this, but myself, but a lot of the time too, when you think about it, the amount of preparation is not just the very specific preparation for this raise that we're running, but the years of a career of building relationships and credibility that went into everything you were putting to bear within a fundraise. But if we want to be really tactical and just say like when you start creating materials, when you start reaching out and asking for intros, you want to do it with more time than you think you need. And so I like seeing founders start this 6+ months before cash out. I mean, and to me, that is already cutting it close. I find in my own experience and actually speaking to founders on my own podcast where we interview founders that raise capital, that the best ones, the most elite ones with the best fundraisers, like who could probably wait for longer because they have so much credibility and network. Those guys and gals, they're starting a year plus out from cash out. They don't want to flirt with this idea of like a gun to my head and not having the leverage you need to actually do a great fundraise and have negotiating leverage.
All right, it makes sense. Pivoting a little bit here, we work with advisors, CPAs, accountants. Those are mainly our audience. And I know a question that may come up is we may have clients that looking to angel invest here, Jason. So can you talk about why someone should angel invest, why they shouldn't, how to do it? So let's go through that process of angel investing.
Yeah, how much time do we have, Rory? It's a good question, and we don't have to go so deep into a masterclass on this, but there are a few thoughts that come to my mind when it comes to, do you have a client that wants to invest, wants to angel invest? And the first thing I'd say is you have to understand why someone wants to angel invest. Is it something they want to do for fun? A lot of people talk about angel investing as the most expensive hobby. I like calling it a very expensive country club. It's like you spend money, you invest $50,000 into a company so that you can tell everyone that you're an angel investor. Which, by the way,
it's like having a restaurant, right?
Yeah, totally. Yeah, big money pit, but very cool to say that you have one, right? And as much as we laugh and joke around it, I think that's an awesome reason to angel invest, like doing something fun that supports an entrepreneur's dream, supports the economy some. I think that's great. I think the next layer beyond that is to say, okay, can I generate alpha here? Can I actually build this into my portfolio of how I want to invest? And I think the two biggest things, and this might sound overly simplistic, a little pedantic, is just like making sure that you have a portfolio approach. So if you're getting pulled into angel investing because one person that came in and said, "Hey, Rory, starting this company, I'd love for you to invest," and that is causing you to reach out to your accountant, your financial advisor, whatever, and say, I want to, do I have the money to put into this? I want to do this. That's great. But I would love to see people say, to engage with that client and say, okay, let's talk about incorporating this into the overall thing.
Yeah.
You need to build a portfolio here.
Right.
If you want to actually invest in angel stage, early stage company, we have to understand that the probability of success is very low. But if we want to build this intelligently, we are going to try to at least be able to do 10 equal sized bets in an equally risky category of companies. So, if you're going to do $100,000 split across $10,000 checks, and you give your cousin with a idea on a napkin $10,000, and then you say another one of these $10,000 bets is going to go into, I don't know, a pre-IPO company. Look, it's probably not going to blend out to the returns that you're looking for. So
Right.
if you decide that you want to at least dip your toes in the water, what I want people to do is say, can I allocate at least 5, but really 10 equally sized bets into this space, and dedicate yourself to saying, okay, if I'm going to do one, I'm going to do 10, and we're going to try to find them. So that's the first thing I would say. And the second thing I would say is try to find a Sherpa, try to find somebody that has a little bit more exposure to this space to help you along the way. I don't want to say that angels are marks, but in some ways they're marks, right? They're like trying to find, if a company's like trying to find money, they're trying to find somebody that's going to be able to release that money. And you should know that about yourself if you're not experienced. So I'd highly recommend you have some kind of Sherpa to help you.
Yeah, we get people all the time. Hey, can you look at this deal for us? And obviously, we go back to their risk profile and let's take a look at it. So yeah, I totally agree with you here, Jason. Let's talk about investor psychology, because I'm kind of fascinated to get your thoughts on when you think of venture capital in having investors come in with rounds here. I know there's a lot of FOMO that probably goes into maybe some raising this money. So I want to go into more of the behavioral psychology of working on getting investors motivated. It's like being chased instead of chasing. So let's talk about that when raising money.
Sure. I'm glad you brought it up. It's one of my favorite topics. Well, look, first of all, what I tell people in any sort of sales, right? If you were taught any sort of standard sales, there's this idea of getting into the mind of the buyer, right? I often do this demonstration in my workshops where we're not talking about selling necessarily, we're talking about fundraising. But I always do this thing about, you've heard the sales interview question, Rory, can you sell me this pen? Can you sell me this pen? Like, what are you going to do, right? And we do this demonstration because, call it 9 times out of 10, somebody who doesn't have a sales background, they'll go do the demonstration with me and I'll ask them to sell a pen, and they'll go, okay, well, look at how well it writes, and
you can write your story, blah, blah, blah.
Yeah. Well, how do you want to write? It's the best pen you've ever seen. They'll try to do those things. And we always point out that, the workshop goes and I point out, well, if you were trained in sales, they would tell you the right approach is to say something like, excited to tell you about this pen, Rory. Before we get into it, I'd love to hear a little bit more about you, right? Tell me a little bit about your company, right?
Going back to deep discovery.
Right, deep discovery. So because the whole point of this exercise was to say, the best salespeople in the world know that they need to get into the mind of the buyer to really be able to influence them. Because with the pen example, you could find out that the person was like, you know what, I never write anything anymore. I honestly just want I want to look smart. I want to look smart, and I want a beautiful pen on my desk that catches people's eye. In which case, if you were selling them that pen, you would never talk about the writing. You would talk about, like, look how beautiful it is. How kind of catches your eye, right? And the same thing goes with investor psychology and fundraising. I tell people, if you don't understand why investors are making decisions and the things that influence them, how on earth are you going to be effective in fundraising, right? So with investor psychology, the biggest things to understand are, one, what is their business model? What are they betting on, and how are they how are they deciding whether or not a company is worth their time or not? One of the biggest things is that their business model is a hits-driven business where one or two winners covers all their losers. So if you can't tell a story that says you could possibly want to be one of those winners, then you're already out, right? And then the second thing that everyone needs to realize with investor psychology is that when you're betting on a company, when you're investing at the earliest stages, there is almost no guarantee. Yeah. We are working with extremely limited data, as an investor. And so it's feel-based and it's signal-based. And once you understand that, then you become dangerous, because you understand, well, if they're looking to see one, what's the credibility of this company? Am I the only investor that thinks it's interesting? Well, then you can start doing things that make them feel is the operative term. Feel like this company is interesting. One way to do that is by them understanding that other investors are interested. Well, if Rory is interested in this too.
The FOMO,
that's FOMO, right? If you are able to get a great referral, right?
Social proof.
Social proof, exactly. None of that is scientific. None of that says just because Rory introduced you doesn't mean you're going to be the best executive in the world, the best founder in the world. It's certainly better than if nobody introduced. Right. So there are all these little keys, but it all boils down to, like, how do investors make decisions? What are the things that influence them? And once you understand that, then you can actually leverage, investor psychology to your benefit.
Yeah. Speaking a little bit of psychology here, I know in your bio, and I know you talk about it in your bio, and you talk about it in your speaking engagements, is that you really suffered from imposter syndrome. I've suffered from it too, Jason. You want to avoid failures. I was the same. That's why I did improv, because I needed to become okay with failing. So can you give maybe our audience members some tips on how to maybe reframe your thinking to address that imposter syndrome?
Yeah. So, I mean, it's something that I've worked on deeply throughout my life, and certainly made progress, but it's hard. Old habits die hard. Yeah. I think one of the biggest things to embrace is that nobody's perfect. It seems like such a cliche, but nobody's perfect, and failures are like really the only way people get better. So if you're cool with just staying where you are and staying in this like feeling like I'm an imposter, I don't deserve to be here, then never trying to get to some place where you're a little bit outside of your comfort zone, then you never will deserve to be there. And then the second thing is, you just have to understand that the people that you look up to are likely not that different from you. They're really not that different from you. They just put one foot in front of the other, and they kept going. My biggest push for people is, it's okay to be bad at some things, as long as you know, like, the one or two things that you're dope at. That was one of the biggest unlocks for me, is that I really felt like I needed to be the best at everything. And if I wasn't, if somebody in the world was better than me at something, then I was an imposter. I didn't deserve to be in some of these rooms. And when I finally realized, like, I'm really good at this one thing, and I'm really bad at these other things. That was when, like, I was able to start really moving forward, because I used to be like, one, I wouldn't acknowledge my skill level in one thing. And then the things that I was bad at, I was like, I just got to hide those things. I got to pretend like I'm better than I am. But yeah, I think if you can take that approach, you guys will see some big changes around the idea of imposter syndrome.
Yeah. I like it. Now, I was watching one of your other talks, and was it Narrative B.I.G. Can you talk about Narrative B.I.G.?
The narrative B.I.G.
There's an acronym there. I don't necessarily remember what it stands for, but I think grandiose was the last one. Can you talk to our audience about how they can, or how founders are utilizing Narrative B.I.G?
When we talk about influencing people within fundraising, I think it applies to other, honestly, types of influence in sales. There are a few things that we understand that a story needs to be, and that a lot of times, to be honest, like, they might seem obvious, but founders just do the exact opposite. So B.I.G. is brief interesting, and grandiose. Brief is very big, is very important, because the tendency for a founder is to ramble and to say so many things, right? I always say that founders are too close to their business to be great naturally, because they think everything is important, when really, like, you just need to tell your audience, the listener, one or two things. Just get them interested in those one or two things. And once you get that opportunity to hook them, then you'll have more opportunities to tell them all the details. Right, exactly. Obviously interesting and impressive. Like, we need to make sure that it's interesting for what the audience is looking for, right? You need to understand what they're looking for, so your story addresses that. And then, very particular for venture capital, it needs to be grandiose. It needs to have the potential to be that 100,000x company. It can't just be a good business, Rory. I mean, that is one of the things that I really try to correct within founders' minds, is that if you're not a venture-backed business, you're a bad business. It's just not true. Like, I run a very good business that I'm not going to raise venture capital for. And so, but if you're going to raise venture capital, it's got to have the G of B.I.G. It's got to be huge. It's got to be grandiose.
It's so funny too. And for many in our audience, they probably know what venture capitalist is. They probably get private equity. Some of those out there don't really understand the difference between the two. I've asked people before that have come on, can you give our audience a brief definition between venture capital and private equity?
I mean, venture capital is a subset of private equity. It is a type of allocation of private equity funds, and it really just boils down to the stage of the company and the outcome expectations is probably how I would define those things. I think venture capitalists are typically interested in backing companies, high growth companies at very early stages, where they can underwrite, as in they can come up with a scenario where that company becomes
moonshots,
100 times larger, right? Moonshots, right?
And private equity is looking for the singles, doubles, 2x, 3x.
Singles and doubles. I heard this great story of, like, one of the managing directors of Silver Lake, gigantic private equity firms. And the firm, he said, what did he say? He said, we hit singles and doubles. We steal third, and then we go home on a pass ball. Like, we get the home run on a pass ball. And I was like, that is amazing. It's an amazing. And whereas venture capitalists, if you wanted to keep the baseball analogy going on, I used to work at Major League Baseball. Venture capitalists are like Aaron Judge, like swinging for the fences every single time and striking out.
Right.
The year that Aaron, I think I might mess this up, but the year that Aaron Judge set some records, he also set the record for the number of strikeouts.
Right.
So
it's the venture capitalists are okay if you're under the Mendoza line, for those in the audience, is under 200 batting average, right? But if you're hitting 60 home runs, right, or you have those moonshot home runs, they're excited. I'm also fascinated with family offices here in the rise of patient capital. Can you maybe talk about the work family offices are doing in courting founders in relation to maybe the venture world?
Yeah, well, look, I think it is blending a little bit. I think family offices are looking for some of that direct deal exposure to these companies that could be huge multiples on top of where they invest. And I think there has been a little, sometimes there are these companies out there that are a bit more challenging to attract venture capital dollars from, because of the investment horizons that some of these people are playing within.
Can you give the venture, sorry, I'm giving these parameters here. Can you give the venture time horizons on average, Jason?
Yeah, I mean, so, like, look, if you're investing in a SaaS company, and I can talk about it from different perspectives, but like, there's this idea of triple, double, where it's just like, can we see revenues triple every year for the first 2 years and double every year the first 2 years? And at least in terms of the growth rate that you need to see, that is kind of an expectation that a lot of venture capitalists want to see within certain software growth cycles. And while it's still, I believe that there's this expectation of a 7-8 year
Yep.
investment horizon, there is also like this feeling like we need to see this hyper growth initially in order to feel comfortable with this investment. And there are just some bets out there that aren't going to generate that, and are much longer term feeling bets where, if a source of capital doesn't have this fund cycle associated with it, where this is the problem, right? If you're attached to a fund cycle, you kind of have to show your investment.
Right?
Yeah, exactly. You have to show your investors, your own investors, your LPs, these returns on a cycle so that you can go raise your next round of capital.
Yeah.
And that dictates a lot of the behavior of their investments. They can influence those investors. But if you're a family office and you're sitting on evergreen capital, and you can just say, like, we know this is long-term great. Family offices become very
We're okay with this going on to generation 2 and 3.
That's right. And so it becomes a very interesting source of capital for a lot of fantastic businesses. And I wish more family offices would realize that sort of access that they have, because they're unique sources of capital.
Yeah, I think we're seeing that more and more. I don't know where I saw the stat, I might butcher it, but I think there's, private equity is like 5 trillion, and then family offices hold 10 trillion. I don't know if those figures are right, but it's almost double what private equity is. So, these family offices are sitting on large, trillions of dollars in sums of money.
Yeah.
Awesome, Jason. This has been educational. I really appreciate you coming on. Is there anything that you want to share with our audience that we didn't talk about?
No, I mean, look, I know your audience isn't my typical audience, but it does seem like they probably work with people tangential to my space. If anyone is looking to hear more stories about fundraising, I have a great podcast called Funded. Love for you to check out. And then for those out there that are raising capital, we have a lot of advisory services that have been quite successful. So look me up. I'm at Jayeh on every platform, Jayyyeh.
Yes, follow Jason on social media. A lot of great information there. Jason, I appreciate you coming to the show. We'll put all that information on the show notes, and we're looking to have you back on in the future.
Awesome. Thanks so much, Rory.
Thanks, buddy.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.